It's time next for the business news with Kate Moody. Good evening, Kate.
Hi, Delano.
Starting out with a big shake-up at the top of one of France's biggest companies.
Absolutely. The board of directors of the energy giant Engie has now voted against renewing the mandate of its chief executive. Isabelle Cochet's 4 years in charge have proved controversial as she pushed for more environmentally friendly projects. As the top shareholder, the French state is understood to have voted against her. It deals a symbolic blow to the administration's gender equality ambitions. Cochet is currently the only female boss of a CAC 40 company. James Wilson reports.
4 years ago, Isabelle Cochet took the helm of Engie as CEO, becoming the first woman to head up one of France's top 40 companies. Aged 53, the mother of 5 has focused on expanding the company further into the green energy market, and she's done so by selling off 15 billion euros worth of Engie's assets, including its oil and gas divisions.
The thing with renewables is that this is a branch of technology that's competitive when compared with fossil fuels. They're becoming cheaper and more efficient, not just in environmental terms, but also from a financial point of view.
But her tenure has not been without controversy. Engie's share price has grown by a modest 10.8% since she took over, but that's less than rivals. And many board members unhappy with her appointment in 2016 have remained loyal to her predecessor, Gerard Mestrelat. As divisions became apparent, 50 public figures signed an open letter to the press calling for board members to keep Cochet in her job.
We have only one woman in charge of a top 40 company who's steering a big energy corporation towards efficiency and renewable energy. The French state, the president, and the finance minister want to punish and get rid of her.
The French government holds a 24% stake in Engie and is understood to have voted against her reappointment.
Let's check in on the day's trading action now. Wall Street has been rising, the Nasdaq reaching another record high. Tesla shares continuing their rather rocky week. They've risen about 3% today, despite admitting that the coronavirus in China would be impacting its production there. The major European indices closed higher earlier on. The CAC 40 outperformed. It was up nearly 0.9 of 1 percentage point. Shares of steel producer ArcelorMittal jumped 11%, while Deutsche Bank was up 14%. After the German lender announced a U.S. fund manager had taken a 3% stake. Well, investors around the world were also encouraged by China's announcement that it would be reducing tariffs on U.S. goods, an announcement to take place later this month. It's just 3 weeks after Beijing signed a Phase 1 deal with Washington aimed at diffusing the trade war between the world's two biggest economies. China had committed to buying $200 billion more of American goods and services over the next 2 years. This move will help Chinese companies to do that. Laurent Berstecker has more.
De-escalating its trade war with Washington, China said it will halve tariffs on hundreds of U.S. goods by February 14th. The move will affect 1,717 products, including soybeans, seafood, and poultry, worth around $75 billion. It will see existing tariffs halved to 5 or 2.5%. The announcement comes 3 weeks after the two countries signed a Phase 1 trade agreement and reflects Beijing's commitment to boost its purchases of U.S. goods and services by $200 billion over 2 years. Washington, meanwhile, has pledged to halve its own tariffs on $120 billion worth of Chinese goods, down to 7.5%. Despite these concessions, both sides are still maintaining tariffs on the majority of their trade, worth hundreds of billions of dollars. Beijing's planned tariff reduction comes at a time where the Chinese economy is struggling to cope with the impact of the coronavirus. The epidemic has already seen several major companies suspend or completely close operations in China. The outbreak has also affected consumer demand, making it even more difficult for the country to abide by its purchasing commitments. Were it unable to meet its target, Beijing could invoke a disaster clause included in the deal, which may allow it to renegotiate its agreement with Washington.
Moving on to some of the day's other business headlines now. Twitter shares have soared 16% as its fourth quarter revenue topped $1 billion for the first time, and user numbers rose. Other social media apps have reported a slowdown in ad spending. Like them, Twitter has been facing pressure to weed out fake, manipulated, or misleading content. Nokia reported an 11% rise in its profits in the period from October to December. The Finnish telecoms maker has pledged to continue investing in 5G technology as it competes with Huawei and Ericsson for customers. Nokia said it now has concluded 66 commercial deals for fifth-generation mobile technology. And the International Trade Commission is investigating a patent case involving Google and speaker maker Sonos. Sonos sued Google in early January for patent infringement over some components of its audio players and controllers. Google has denied the allegations. OPEC and its allies appear divided over whether to further cut oil production in an effort to boost slumping prices. A technical committee had to extend their talks for a third day, and while it formally recommended scaling back output, Russia has reportedly rejected that proposal. Russia is not a member of the producers' cartel, but it has been participating in a broader scheme to reduce global supply. The rapidly spreading coronavirus has all but halted travel and limited manufacturing across China, and its demand for oil has plummeted. The French oil giant Total is the latest to say it's expecting a potentially significant reduction in demand over the next 2 months of up to 1 million barrels per day. Well, Fiat Chrysler may also have to temporarily stop production at one of its European factories because that coronavirus outbreak is weighing down its supply chain. The carmaker's CEO told the Financial Times that 4 of its Chinese suppliers have been affected and a decision would be made in the coming weeks. The auto industry has been particularly exposed to the slowdown in China, and a number of Asian and American brands have halted or reduced production. There are few firm figures for now, but analysts say that businesses in China and around the world are facing a major upset.
Is a huge bottleneck for production processes, and we really don't know the extent to which it's going to affect global supply chains, but the definite answer is it's negative. So people who had been looking for the beginning of a rebound in global trade and industrial production, that's definitely going to be delayed.
And you can hear more from Mickey Levy about the economic impact of the coronavirus in this week's People and Profit. That's on our website now.
France24.com. Thank you very much for that, Kate. Kate Moody there with today's business